Hey guys, it's Will here. So the question is whether there's a reversal in. On Friday we had quite an up day. So the way I do it, and if you watch my videos you probably have a sense of this already, but what I do is I look for an uptrend established. There's some ways you can get in sooner, which it's a bit riskier to try to catch, the bottom of a downtrend, a turnaround, but I just thought I would show you some of the stuff on the technicals. So if we look at NASDAQ, we've had this downtrending channel, and we're right at the bottom of this channel right now. So we were due for a bounce, and if you look at the MACD, or the price percent oscillator, you can see how far down we are. And so, we were due for a bounce. So these charts are Heiken Ashi, so they kind of smooth out the candlesticks, allowing you to see a better downtrend or uptrend. And if you want to get this program, it's TC2000. I got a link in the description below. You can get a free trial or $25 off your purchase. So some of the things that I have here, you've got the bottom of this channel. Obviously, we're down below the 50 and the 200, and the 50s crossed down below the 200, which is fairly, pretty bearish. We have lower highs like established here from here, and lower lows. So generally, it's not a great, a great situation. But we're at the bottom of the channel where there's a bounce potentially, and you might get a short-lived recovery to, the upper channel or the 50-day or whatever. And so there's still a chance, if you want to do a shorter term trade. But people get excited and think that, as soon as there's a huge up day that it's over, that the bear market's over, and that could be the case. But if you look back at previous situations, so I've got these green and red volatility stops, which kind of help. It uses the average true range, and it kind of helps you see when things are heading up, reversing. But what you have sometimes is you have these, see the reversal here, got a green volatility stop, you're above the 80 EMA or 60 EMA. And then it comes back down, it bounces off the 200. And then up here, you had a couple of green volatility stops, and then a reverse, and then you had another one, and you went up to the 200 and bounced back down. So it's fairly risky to try to catch these bounces, but you can time them, like I said, for shorter term trades. But you'd want to see a green candle, which will happen say on Monday. But the nice thing when you buy right at a reversal is, or at a low point, is that you have a good stop location that's not going to be crazily high away from where you purchased it. You can also use the green volatility stop as a stop loss, but that determines, like, there's a setting here. If you look up here, these are all the moving averages. If you look where I said V stop 1.25, you can set the value to 125 or 1.5 or 2. So the bigger the value, the bigger the distance will be from the stock price to the stop. It gives you less, it'll help. It's sort of a, what's the word? It's a trade-off between, having a bigger distance between your stop loss and the price, and not having, chopped out in and out. So giving it time, giving it more room to move up and down. But, so right now, like I said, there's a chance there. What we normally want to see, like when you see these turnarounds that failed, a lot of times you'd want to see a higher low as well. So you don't, sometimes it goes straight up like this, but if you get the situation like here when you're in an uptrend where you pull back a bit, head up, pull back a bit, those are good entry points. Pull back and then head up again. And so, ideally, if you're a bit more patient, you want to wait for a turnaround. The other thing you can do is look at weekly charts. So if you look at the weekly chart, I'll just turn off these lines. There was a short-lived little turnaround here, it failed. So, still heading down. On a monthly chart, you have quite a downtrend as well. It could head down to the 50. It's hard to say how long these little pullbacks last, but you've got there's a lot of momentum in the downside. And there's, with the Fed and that, there's interest rate hikes coming. But, we'll see what happens. So if we look at other charts, we have similar situations. Green candle, which is the start of a reversal, like you see a green candle, or and then you'll see a green candle with a green volatility stop. So that could be, like I said, short-lived little reversals. You're way down here. Those are generally weak areas. What I find, like the biggest uptrends happen, like if you look here, you're above the 50, the 50 is above the 200, and the first sort of crossover of the 50, like here, you get the pullback. Once you cross the 50, you get a retest, and then you head up. Those are the good times to get in. Those are the ideal times. So you're above the 0 line on the price percent oscillator, and you're above the 50. So those are the best times. So this is, you've got lower highs here and lower lows. So the same sort of scenario with a channel. S&P 500, similar situation. You've got this channel. You're right at that lower part of the channel. So it's exactly the same as the other ones. I'm not going to go into it too much. Dow Jones, same sort of thing. Got a green candle. It looks like it could turn up. So you can potentially put a bit of money in. Some people scale in when they enter. They don't go all in at once. But so you might get a trade here, but it may only go up to the 50 or the 200. But when we scroll back at these good uptrends, you had the 50 above the 200 for this long period of time, and you were above the 0 for this period. And so now we're in a pretty weak area, but at the same time, there's a reversal. It's very oversold. So I could go into sectors. Obviously, I've got a whole bunch of sectors that I have, which is like, instead of buying the index, I like to buy the sectors, or you could even buy at stocks. So if you look at the steel sector, that went up huge. It's a green volatility stop. It's above the green volatility stop, huge 21% gain. If you click on this open component watch list, then you see all the stocks in there. And you can click on this and see if you want to buy individual stocks. That's really an incredible, this is US Steel. That's an incredible offering. Now, if you look here, you're still in this downtrend. So I can actually kind of smooth it out so you don't just see an instant reversal. But once you do get in, you tend to go up. So if you look here, it crossed here. It was kind of low on the price percent oscillator. If you wanted to wait till it crossed over the 50 and did a retest, you could get in here. And this would be above the 0, and everything looks really good for that run there. So you don't have to get in right at the bottom. But I like that feature of TC2000. So if you look here, obviously ARC had a huge rebound. As you see here, you had these little ones here, didn't get too far, but you could potentially trade that for a short duration until it hits the 50, see what happens. So that's pretty much all I want to say for this video, and good luck, and we'll catch you in the next video.